Okay, so I'm live. I'm also live here. All looks good. Share my screen. Yes, friends. Shall we begin with the final session now? So we have the material also open over here. We have I think study material is not required now. My book is enough. Okay, so I think we did a question on working capital management, correct? Friends, now I'll start off with working capital management, or I will do one illogical question first. Friends, this capital structure has a confusing question, but which is a very good question which we should do. Wait, I need to take the chat also. Okay, I can now see the chats here also. Perfect. Shall we resume now? Okay. So friends, we'll just read and discuss this one question first. Okay, question number 20. Shall we begin now? Okay. So everyone take question number 20 now. Question number 20. There are two firms. Firm A is there, firm B is there. Firm A is 100% equity and firm B is 50% equity and 50% is debt. Alright. They have given their net operating income also over here. They have given you the cost of debt, that is interest is also given. Net income is given, and they have given you your KE, or KE is what? Net income divided by whatever is the value. This being a tricky problem, friends, working note number 1, can you please copy down this entire table in your books first? Full table please copy down in your books, because unless you get these numbers right, this question might get a bit confusing. This is one area in the entire inter FM which is confusing, where you have net income approach, net operating income approach. This area is a bit confusing because they are all different opinions, and it's very frustrating and confusing for a person who is doing this. So don't bother much. Just follow it just like it is given in the book. Finish it off. Focus on the other areas, friends. All right. Can you please write down this entire thing now? All right, friends. Are you all done? Fine. So, friends, once you are done writing till here in your books, I'll just go down. Okay. Now, computation of equilibrium value is what they are trying to find out. They want to find out the equilibrium value of firm. So, for equilibrium value, they have given you a new KE. What is the KE they have given over here? 9.09%. So, we have learned that EBIT, that is the net operating income, earnings before interest and taxes, how much? 5,000. They have an overall equilibrium value cost of capital is given as 9.09%. Considering that, what will be the total value of the company? It will be 55,005. Can you write down this in your books now? 55,005. Please write down this in your books now. All right. So friends, now with this we got the total equilibrium value, or in the long run, the value will be nothing but this is cash flow divided by discounting factor. It's a perpetuity formula. Okay. You get the answer as 55,005 for company A and 55,005 for company B. Out of this value, 30,000 is the value of debt. Therefore, what will be the value of equity that you get over here? Do you get the value of equity as 25,005, friends? Can you write down this in your books now? I hope my audio and video is absolutely clear for all of you. Fine, friends. I believe you are all done with this part now. Okay. So once you are clear with this part, value of equity part, once you are clear, let me just come down. Now they have given unlevered firm has a KE of how much? 9.09%. KD can be found out using the formula interest into 1 minus tax divided by the value of debt. Correct. So when you do it like this, do you get the answer as 6% over here? Correct. So after you got 6%, they have just taken 9.09 plus the additional value, or friends ignore this part, this is confusing. Net income, overall net income is 3,200. Just check it upstairs. Here it is 3,200. Am I right? So again, you can do it in this method. Overall, the net income divided by value of equity will turn out to be how much? 12.8%. This is the cost of equity for levered firm. Can you write down this in your books now? Ignore this part. This is also giving you the same answer, but this is a much more logical and a more understandable answer. Please write down this in your books. KE of levered firm. KE of unlevered firm will be how much? It will be the same 9.09. But KE of levered firm will be how much now? It will be 12.8%. All right, friends. Are you all done writing till here in your books now? Perfect. So friends, once you are done with this, I think we got the answer as 12.8%. Everybody clear with this part? So earlier we got 9.09% as the this thing. So we got the value. Okay. After getting the value, we got the value of equity separate, debt separate. After we got that, we are just finding out the KE of a levered firm over here. Everybody clear with this part? So this is a little bit of an illogical question, friends. So just by heart this how they have done it. Just learn it that way and close it off. Now we'll go to a more of a logical area. Shall we move to the next part? Okay. So write down the next heading in your books, working capital management. Okay. Friends, inside working capital management, we have mainly three areas. The first one is called as debtors management. Second one is called as stock management. And the third one is what you call it as creditors management. Okay, so now when you talk about debtors management is where we have to learn many things, and here we have to learn about factoring, and there are various terminology that comes into this. Okay, and there are a lot of terminology. This is the most important among the working capital management part, friends. Everybody clear? Stock management you learned already in costing chapter. Okay, there's a chapter called as material, where you learn about EOQ, ROL, ROQ, minimum level, maximum level, lot ABC analysis. That entire thing comes under what? Stock management. Creditors management is somewhere similar to debtors management. Okay, because one fellow being a debtor, other fellow will become automatically what? He will become a creditor. Are you all clear with this part now? Okay, so just quickly put this overview in your books, after which we'll start solving it one by one. Alright friends, now I'll start with the concept of factoring. In order to explain the concept of factoring, I want some help from all of you. Can you tell me a name of any innocent film actor that you know? It can be from anywhere. Tell me a name of any innocent film actor that you know. Any innocent film actor. Wait, there is one more management over here. I forgot to talk about that. That is called as cash management. Inside cash management, you will have to make a cash budget. Alright? Yes. Tell me a name of any innocent film actor that you know. Any film actor. Come on. Chat in the chat box. Nivin Pauly, Brahmanandam. I'll talk about Nivin Pauly. Now tell me a name of any cunning actor that you know. Okay, any cunning actor. Mammootty. I think I've already taken Nivin Pauly for the first one. Now tell me a cunning actor. Some cunning actor. He can be a villain in the movie. Dileep. Fantastic. So Dileep is a cunning actor. Nivin Pauly is an innocent actor. Nivin Pauly has sold goods for a value of 80 lakhs to Dileep. Dileep has to make payment for this goods now. But unfortunately, Dileep has not made the payment. Instead, Dileep is just playing around with Nivin Pauly. He is just delaying today, tomorrow, I'll pay you day after tomorrow. Finally, Nivin Pauly gets fed up. That is when Nivin Pauly will go to Mammootty. Alright. And Nivin Pauly will tell him, Mammootty, please help me to collect the money from this fellow. Dileep is a very big headache. So now Mammootty will use his skills and he will go to Dileep, somehow speak to him, and he will collect 80 lakhs. After collecting 80 lakhs, he will pay to Nivin Pauly only 75 lakhs. Why does he do like that? In between, 5 lakhs will be his commission. This is what we call it as a factor. So in my example, Mammootty will be the factor, and this 5 lakh that he is taking is what we call it as a factoring commission. Can you please draw this diagram in your books? Sanjay Dutt was also a very good suggestion. Alright friends, are you all done writing till here in your books now? Fine. So here when you appoint a factor, you have some advantages also, you have some disadvantages also. Alright. So So what are the merits of appointing a factor is you will have savings in bad debts. Friends, here also there are two types of factor. One is called as a factor which is with recourse. Other one is factor without recourse. Okay. A factor with recourse means if the loss is happening even after Mammootty goes, the money is not being able to cover, the loss will be suffered by Nivin Pauly. That is called as with recourse to Nivin Pauly. So if Dilip doesn't pay, Nivin Pauly will suffer the loss. But if you're talking about without recourse, in that case, Dilip doesn't pay, Mammootty will suffer the loss. So only in case of without recourse, Nivin Pauly will not have to pay any losses. Entire loss will be paid by whom? Mammootty. But for without recourse, Mammootty will charge very high commission, friends. Are you all clear with this part now? Okay. So now savings in bad debts is advantage number one. Same way you are having savings in administration cost. You have savings in administration cost. Then I think these are the major two advantages that you get when you are going for a factor. But what are the demerits of a factor? Can you tell me? First demerit is you have to pay a factoring commission. Everybody clear with this part? Second important part that comes over here is there is something called as interest on advance. What is this? I will teach you in the next page. Alright. Can you write down this in your books now? Yes, friends. Even while you write down just one curious question, can you just type the location from where you are attending the class now? Just for my curiosity, I would like to know. You type, in the meanwhile, I'll take the next part. Alright. We have from Bangalore, Coimbatore, Trivandrum. Fantastic. Bangalore, Kozhikode, Aisha, I am also in Kozhikode right now. Happy to know that. Alappuzha, Thrissur, fantastic. So we have the entire South India here, is it? Very happy to know that. Great. Okay. So friends, now when you talk about a factor, one of the things that comes is called as interest on advance. Sometimes what happens is Nivin Pauly will request Mammootty that you are anyways going to collect the money from Dilip. Instead of collecting the money later, can you give me a loan right now? So what Mammootty will do is Mammootty will tell yes, and Mammootty will put some terms. Okay. What is the amount that is receivable over here? Everyone tell me. Is the amount receivable as 80 lakhs? Mammootty will tell, I will keep a 10% reserve. Now tell me what is 10% of 80 lakhs? Is it turning out to be 8 lakhs? So what is the balance amount that you get over here? Do you get the balance amount as 72 lakhs? Correct? Now on this 72 lakhs, what he will do is he will reduce his factoring commission. Because that commission is anyway something that he will not be pay, he will be taking it back. So how much is the commission that's coming in this case? It is coming to 5 lakhs. After reducing the commission, what is the balance that you get over here? Do you get the balance as 67 lakhs? On this 67 lakhs, he will charge an interest on the advance at the rate of 18%. Does that turn out to be 12.60 lakhs? He will deduct even this and only the balance money will be paid. So what is 67 minus 12.06? Do you get the answer as 54.94 lakhs? This is the final amount to be given. So friends, this one particular format, please by heart it, okay? So you have a receivable minus reserve minus commission, that will give you the balance on that interest and then balance paid. Can you please write down this in your books now? All right, friends. So I hope you are clear with the concept of interest on advance. Now, next I will teach you the next one important concept over here, which is called as opportunity cost on fund blocked. So basically, in this example, how much was my debtors? Debtors is 80 lakhs. So my 80 lakh is blocked right now. Yes or no? Since my 80 lakh is blocked, had I got this money today, I could have put this money in my FD. I would have got an interest of at least 6%. So how much interest I would have got, which I am not going to get now? 80 lakh into 6%. Do you get the answer as 4.80 lakhs, friends? This 4.80 lakhs is what you call it as opportunity cost on fund blocked. Please write down. All right, friends, are you all done writing till here in your books? Friends, some books they use method 2. Even though for me method 1 is correct, method 2 what they do is they will take the debtors. Scroll it down a little bit. Debtors is 80 lakhs. Okay. Let us say this company has a GP ratio of 20%. So they can find out what is the cost of goods sold of debtors. So that they'll get the answer as on 80. If 20% is the GP, that means remaining 80% is going to be the cost. How much is the cost coming in there? 64 lakhs. Then what they will do? For opportunity cost, they will take 64 lakh into how much is the FD rate that we talked about? 6%. Do you get the answer as 3.84 lakhs over here, friends? Okay, that will be the final answer. Okay, so this is another method, but according to me, I would recommend this method only. But in your textbook, sometimes they solve it using this method also, so you should know about this. Can you write down this also in your books now? All right, friends, are you all done writing this in your books now? So I believe we are done with this part also. One more concept heading, average debtors and average credit period. Now, let us say my yearly sales is turning out to be 320 lakhs. But my credit period is 3 months. So that means in 1 year I'm selling for 320 lakhs, but on an average I get my money within 3 months. So from this, can I say my average debtors is equal to 320 into 3 by 12? Do I get the answer as 80 lakhs over here, friends? Correct. So here I can create a formula. Formula number 1 is average debtors is equal to sales into credit period divided by what? 12 months or 365 days. Everybody clear? Or I can also change and play around with this formula where I can say average debtors divided by sales into 12 will give me what? It will give me my credit period. Can you write down this also in your books now? Alright friends, I believe you are all done writing till here in your books now. Can I go to the next part? Okay. So once I'm done with this, let's do one thing. Now I think we can crack some questions on this one. Are you ready? Okay. So I think wait. All questions on cost of capital. We have covered a lot of questions there. You can do these questions on your own now. Okay. Fine, this is a question on capital structure, but I think we have done some similar type of problem in cost of capital. Now let us focus on working capital management. Again, capital structure based questions. Yeah, working capital management. First, we'll do a question on factoring because I've taught you the entire factoring now, correct? Yes, this is a very good question. Friends, can you take question number 27 now and write down working note number 1, basic data? Write down all the numbers and understand this question. I'll give you 5 minutes time. Now tell me friends, did you write down the basic data? So here what have they told? The current average collection period for the company's debt is 80 days right now. Half percent of the debtors default. The factor has agreed to pay the money in how many days? 60 days. So friends, normally you get the money in 80 days. But the factor is going to pay it within how many days? 60 days. So in that case, how many days money are you saving over here? 20 days of your fund blockage is getting released. Okay. Now, factor will charge a commission of how much percentage? 2%. Administration cost 1 lakh. Annual credit sales is how much? 90 lakhs. So I'll now write down working note number 2, analysis. Point number A. Point number A. Credit sales. Everyone tell me what is the credit sales that you have over here? Is it 90 lakhs? Credit sales 90 lakhs. They have told that they have a GP ratio or 80% of the sales. So 90 lakh into 80% will be how much? Cost of goods sold will be 72 lakhs. Alright. Now, half percent of the debtors will default. Fine, that come to that part later. So I think then I can find out my bad debts also over here. Correct. So how much is going to be 90 lakh into 0.5 percentage? Do I get the answer as 0.45 lakhs, or that is nothing but 45,000? Everybody clear with this part? Down. Commission is 2%. So can I find out the factoring commission now? That will be on the entire sale value 2%. Is that turning out to be 1,80,000 rupees? Point number E, admin cost is given, and yes, now what I'll do is I'll just show you how much would have been fund blockage. I'll show you in the next page. First, can you write down till here in your books first? All right, friends, are you all done writing till here in your books? Okay, now I'll tell you what will be the opportunity gain. What will be the opportunity gain? Okay, so in that, friends, we'll just interact and see. So first part will be, we can do it on the basis of revenue, or we can do it on the basis of cost of goods sold. There are two approaches are there, as I told you, correct? Based on cost of goods sold. So here, let us check. If it is based on revenue, initially when it was 80 days credit, can I find out how much was my fund blocked? Fund blocked will be, what is my yearly sales? Everyone tell me. 90 lakhs, correct? So it will be 90 lakhs into 80 divided by 365. Is it 365 or 360? 365 days. So what is, do I get the answer as 19.72 lakhs? Revised debtors. Now what will happen? This will come down to 60 days, correct? So what is 90 into 60 divided by 365? 14.79. Therefore, how much is the fund that is released over here, friends? Is it turning out to be 4.93 lakhs? Correct. So on that, my opportunity gain will be 4.93 lakhs released into 15%. That will be 73,950. This will be the answer if you are talking on the basis of revenue. But let us assume you are not doing it based on revenue, then your answer will change. Fund block will now be It will not be 70 lakhs now. What is the new revenue? Cost of goods sold is 72 lakhs. So 72 lakhs into 80 divided by 365. Do you get the answer as 15.78 lakhs? And then what about the revised debtors? 72 lakh into 60 divided by 365. 11.83 lakhs. So how much is the fund that is released over here? Do you get the answer as 3.95 lakhs? Correct. Now tell me what will be my opportunity gain in this case. 3.95 into how much percentage? 15%. That will be 59,250. Can you write down this in your books? Exam, both the methods are correct. I recommend the revenue method, but unfortunately your textbooks have done it using the cost of goods sold method, friends. Alright. Can you please write down this in your books now? Fine, friends. I believe you are all done. I'll share these notes also with you. Nothing to worry. Now let's check. I think they have taken based on cost 59,178. What's the answer? I got 59,250. Little bit of rounding of difference. Annual cost of factoring 1,80,000 also we got. Benefits of factoring will be 24,178 in that case. Wait, administration cost 1 lakh they have taken. Bad debts they have taken. The opportunity gain they have taken minus this thing. So can you write down this in your books and finish it off? We are done with this question on factoring. Fine, friends. I believe you are all done writing till here in your books now. Okay. So we are done with this one particular question also. Is everybody clear, friends? If you are all clear, please type a yes in the chat box. With full logic, we have been able to do this question. Perfect, friends. Can I go to the next question on debtors management? Okay, we'll do question number 26, which is a very, very good question. Everyone take question number 26 now. Working note number 1. basic data. So a regular customer of your company has approached you for extension of credit facility for purchasing goods. So a regular customer, so this is you, this fellow is your regular customer. All right. What do they tell now? He has approached you for extension of credit. He has approached you for extension of credit. On analysis of the past performance and on the basis of the information supplied, the following pattern of payment has been given. At the end of 30 days, how much bill does he pay? 20%. At the end of 60 days, 30%. At the end of 90 days, again 30%. At the end of 100 days, 18%, and 2% of the bill he doesn't pay normally. Alright. A customer wants a firm enter into a firm commitment for purchase of 40 lakh. So the value of goods is how much that he's saying over here? 40 lakhs. Deliveries to be made in equal quantities on the first day of each quarter. The price per unit of the commodity is how much? 400. So I just write down over here. Selling price is 400, on which profit is 20. That means the cost will be around 380. Therefore, you make a profit of how much over here? You make a profit of 20. It is anticipated that taking up this contract would mean you have an extra recurring expense of 20,000. So I'll write down over here. Extra recurring expense will be how much? It will be 20,000. Opportunity cost is 18%. Opportunity cost is 18%. All right. Would you, as a finance manager of the company, recommend the grant of credit to the customer? Can you please write down till here in your books now? All right, friends, are you all done writing till here in your books now? Okay. So now, once you are done writing till here, first what we will do is we'll just try to find out what is the profit of the company. So credit sales is given, that is 40 lakh. How did you get that? 400 into the number of units. I think you are having 10,000 units. All right. How many units are there? 40 lakh is correctly given and 400 is also given. So what is 40 lakh divided by 400, friends? You can just put that also over here. 40 lakh divided by 400 rupees per unit will be equal to how many units? It will be equal to 10,000 units. 10,000 units. Okay. Now, when you come down, you have an expected profit is given of 40 lakhs. Okay. Then you have variable cost of 38 lakhs. Recurring cost is 20,000. Okay. So you have 38 lakh 20,000. Then they have also told that 2% will be bad debts. Am I right? How much is 40 lakh into 2%? 40 lakh into 2% is equal to how much? Is it turning out to be 80,000? That will be your bad debts also. 80,000 will be a bad debts. So once you reduce this, you get your profit. 40 lakh, 38 lakh is 2 lakh, minus 20, minus 80, you make a profit of how much over here? 1 lakh. Opportunity cost, this is what we need to understand and do. We'll do that later. First, can you write down till here in your books, all of you? All right, friends, are you all done writing till here? Just this last part is what I need to explain to you. What is the opportunity cost? That can be worked out only using how much is a fund that is getting blocked over here. Everybody clear with this part? So wait, I'll first show you this table. After that, we will go and work out the remaining part. All right. So just a minute. 37. Okay. 1 minute. I'll just write down and explain to you. Write down the next working note heading. Fund blocked. Or I'll put it as opportunity cost on fund blocked. So I told you we can do it either based on the revenue or the cost, correct? So first I'll write down cost for this project. They are doing it based on cost again. So the cost for this project is actually turning out to be how much, friends? It is turning out to be 38,20,000. How did I get this 38,20,000? You have 38 lakh variable cost, recurring cost of 20,000. That is how you get the total as 38 lakh 20,000. 1 minute, friends. Okay, correct. 38 lakh 20,000. Sorry, I just want to cross check something. Now, in the question, if you go up, they have told at the end of 30 days, they give 20% of the bill. At the end of 60 days, they'll pay 30 of the bill, 30 days of the bill, etc. etc. So from this, I can go and find out the average credit period now. So what will be my average credit period? It will be 30 into 20% plus 60 into 30% plus 90 into 30% plus 100 into 18% plus non-recovery we don't have to consider. That will be 0, correct? So now tell me when I put it this way, 30 into 0.2, 60 into 0.3, 90 into 0.3, 100 into 0.18. Altogether, do I get the number of days as 69 days? Correct. Therefore, my average fund blocked due to this will be 38,20,000 into 69 divided by 365. Do I get the number as 7 lakh 22,136? Correct. On this, my opportunity cost will be, how much percentage have they told over here? 7 lakh 22,136 into 18%. 1,29,984. Let's cross check, friends. Here they have got the answer as 1,31,790. A little difference has come in there. Hold on. Why is there a difference? I think it's a rounding of difference, friends. Nothing else. It should be a rounding of difference. Let me check once again. 30 into 20%, 60 into 30%, 90 days into 30%, and 100 days into 30 plus 30 is 60, 80, 18%. Correct. That is 18 days again. That is 69 days. Have they taken 365 days or 360 days? They have taken 360 days. Okay, that is where the difference has come. So let me change it to 360 and let me check what answer I get over here now. 7,32,166. This into 18% will be 1,31,790. Is that the same answer they have got over here? Yes. They have done it in a table manner. I have done it in a formula manner, friends. Can you write down this in your books now? Please write it down. All right, friends. So we are done with this part also. So which means our profit was 1 lakh, opportunity cost was 1,31,790. Hence my net loss turns out to be how much? 31,790. Is everybody clear with this part now? Yes. So we are done with this question also, friends. 26 done, 27 done. 28 is a question on a cash budget. So in the cash budget, you will have the opening, receivable, payable and closing. But this might take too much of time. I think you can do this yourself. Can you mark this question as homework, friends? It's a good question. Question number 28, cash budget. It's a very good question. Let's do question number 29 now. Question number 29. A company requires 36,000 units of a product per year. So this is a question actually on EOQ, friends. It's a very, very easy question. Let's do this at the earliest. So point number A, your annual demand in this case turns out to be how much? It turns out to be 36,000 units. Okay, 36,000 units at a cost of 100 rupees per unit. So I'll write down purchase cost. 100 rupees per unit. Ordering cost is how much? 250 rupees per order. 250 rupees per order. Carrying cost is 4.5% per year. 4.5% per year, and normal lead time is 25 days. It's a costing question that's come over here, friends. Normal lead time 25 days. Safety stock is nil. Safety stock is nil. 1 year is equal to 360 days. Friends, until the question itself says you should never assume 1 year as 360 days. Okay. Now, calculate the reorder level. So, friends, tell me what is the formula for reorder level? Maximum consumption into maximum lead time. So, here there is only one lead time given. That is how many days, friends? It is 25 days, correct? And maximum consumption means here you are consuming 36,000 in 1 year divided by 360 days means per day you are consuming around 100. So I'll put it as 100 units into 25 days. Do you get the answer as 2500 units as your reorder level? Can you please write down this in your books now? All right, friends. Are you all clear with this part now? Perfect. So we are done with this part. Let's go down. So I think you got 2500 units. Now they are asking you to find out the economic order quantity. So tell me, friends, how do you find out the EOQ? Square root of 2AO divided by C. So that when you do it, 2 into 36,000 into 250 divided by 4.5, you get the answer as 2000 units. Can you quickly write down this in your books now? That is equal to 2000 units. All right. Now they are asking you in the last part of the question, if the supplier is offering you 1% quantity discount, should it be better or should I go for lots of, should I go for EOQ or 9000 units? So you have three types of cost over here, friends. First one is called as purchase cost, ordering cost and carrying cost. So purchase cost will remain the same. In case of EOQ, your ordering cost and carrying cost will remain the same. It will become 4500 each. That's because the number of orders will be 36,000 divided by 2000. But when you go for 900, your ordering cost will change. Friends, there's a small correction here if I'm not wrong. 36,000 divided by 900 into 250 will be 10,000 rupees. Okay. Now, 9,000 units divided by 2 into 99 rupees into 4.5%, this one will be 20,047.5. Okay, so once you do this, what will be the answer that you will get over here? 36 lakhs plus 10,000 plus 20,047.5. It will be 36 lakh 30,047. So which is still better, friends? Even then, EOQ is better. Can you write down this and finish it off? We are done with this question. All right, friends. Are you all done writing till here in your books now? Perfect. So we are done with that question also. Now we'll quickly do question number 30, which is also similar to EOQ, but it is called as the Baumol's model. Shall we quickly do it now? Okay. Question number 30. Okay, he has an annual quarterly cash flow of 9 lakhs. So point number A. Quarterly cash flow is how much? 9 lakhs. 9 lakhs. Arising uniformly throughout the quarter. Company has an investment portfolio of marketable securities. It plans to meet the demand for cash by periodically selling marketable securities. There has a return of 12%. So the carrying cost is how much percentage per annum, friends? 12% per annum. Transaction cost is 60. 60 rupees per order. With Baumol model, they have told in 1 year you have to take it as only 360 days in 1 year. Alright. With this, they are asking you to find out the company's average balance. So friends, what is the annual cash flow they are telling? 9 lakh into 4, that will turn out to be how much? 36 lakhs. Alright. Transaction cost 60, carrying cost is 0.12. So 2 AB, here they call it as 2 UP divided by S. You get the answer as 60,000. So your average cash balance should be how much? 60,000. Your opening cash is 0, closing 60. So your average cash will become how much now? It will become 30,000. Can you write down this in your books now? All right. Then they'll find out the number of conversions over here. Okay. Can you tell me what is the number of conversions? Annual cash flow 36 lakhs. Your ideal cash balance should be 60,000. So in 1 year, you are supposed to convert this 60 times. You have to withdraw money at 60,000 60 times. Then only it will touch 36 lakh rupees. All right. Then time interval between two conversions in 1 year you have got 360 days. But they want to do 60 conversions in 1 year. So every 6 days they will have to do a conversion. Okay, so can you please write down this also in your books? Time interval between two conversions. Yes, we are doing one more final question, friends. With that, we'll wrap up our intensive 1-day FM marathon. We have covered a lot of questions here, friends. These are all past exam questions. All right, friends. I believe you are all done writing till here. Yes. Now let's take, I think this question is already done, right? Not this, not this. We had one other question which is a good one. Yeah, this one. Last question, question number 32. Shall we do this and wrap up today's session with this, friends? Okay. Question number 32. So here they have given you the raw material cost. They have told you prepare a working capital estimate to finance an activity level of 52,000 in 1 year. Okay. So annual capacity 52,000 units in 1 year. 152 weeks are there. RM cost is 400 per unit. Okay, let's not write down this. Wages 150, overheads 200, other selling and distribution overhead 100. Selling price is turning out to be how much? It is turning out to be 1000. Okay. Raw material and finished goods remain in stock for how many weeks? It remain in stock for 4 weeks. So we'll write down RM and finished goods stay in stock for 4 weeks. Work in progress takes how much period? It also takes 4 weeks. Alright. Debtors 8 weeks, creditors 4 weeks, minimum cash balance expected 50,000, receivables are valued at selling price. So now let us do it one by one. Alright. First, they are going to prepare a cost sheet. So they are making a cost structure for 52,000 units. Alright. So for 52,000 units, raw material will be 2 crore, other material will be 78 lakhs, manufacturing overhead 104, 52, total cost, sale value. So from this you will get the profit also. Can you please write down this cost structure now? Write down working note number 2, cost structure. I think I was a bit muted here. I'll repeat once again now. 1 minute. Let me confirm. Can you all hear me, friends? Yes. All right. I'll repeat now. So raw material stock 208 lakh is for 1 year. So into 4 by 52 when you do, you get 16 lakhs for the 4 weeks period when my fund is going to get blocked. Work in progress, how do you find out the work in progress? It is raw material plus labor plus overhead. So normally what they do is raw material is treated as 100% completed, labor and overhead is treated as 50% completed. Everybody clear? So that's why they have taken this 2 divided by 2 and 208 lakhs. So all together you get the answer as how much? 23 lakhs. Everybody clear with this part? Finished goods stock 442 lakhs is the total cost coming into 4 by 52. Receivable 8 by 52. Cash 50,000. Total current asset required will be how much in that case, friends? 153 lakh 50,000. Creditors is again for purchases. That will be 16 lakhs. So once you reduce, you get the net working capital requirement as 137 lakh 50,000. Can you please write down this again in your books? Aradrika, you want me to explain the work in progress part? I will explain it. I just write down over here. Work in progress is nothing but it is raw material plus labor plus overhead. Raw material is taken as 100% complete. These two are normally taken as 50% complete. Everybody clear? That is why what they have done is they have taken 208 lakh in its entirety. But here what they have done, they had 78 lakh plus 104 lakh. So this they have taken 50% complete. Even the other 104 lakh also they have taken as what? They have taken it as 50% complete. Okay. So like that, if you take 78 into 0.5, you get 39. 52. So when you add up these two, do you get the answer as 91 lakhs? So now they have taken 91 lakhs here plus 208 lakhs over here. On that, it is how much? 4 divided by 52 weeks. You would have got 23 lakh as the answer. Correct. So Aradrika, I'll show you this chart also. Are you clear now? Yeah, perfect. So like this, can you write down this entire thing in your books, friends? With this, we are done with this question on working capital also. All right, friends, are you all done writing? Yeah. Okay, Ekambaram, yes, we have done all the important questions, but in this book, ideally you should do the whole book. I haven't covered investment decisions. Ekambaram, that part you have to do it. This book contains in total, I'll tell you how many questions. This book contains all together, 1 minute. I think in the end there are some blank pages, or is it taking time to load? I think it's taking time to load. Let's just wait for a minute. Yes. The last question over here is question number 46. Okay. So there are total 46 questions, Ekambaram. Out of this, I think in my class today, we would have done around 20. There are still 26 more questions, which if you work out, beyond that, ideally nothing should come in the exam. So my only request is, now I have taken everything conceptually. Just spend some more time on your own and work out the remaining questions. And that covers last 5 to 6 years of question papers, friends. So if we are covering the last 5 to 6 year question paper, as far as inter level is concerned, normally the same questions come again for the next attempt. Are you clear with this part? So just work out these questions and trust me, you will be covering almost 89 to 95% by doing all these questions. That balance 5% for learning that, the time that you give will be too much fast. So that is not required over here, friends. All right. Yes. Can you just, do you want to put this diagram in your books? I will share these notes also with you. So friends, we are done with this question also. With this question, shall we pack up today's session now? Please type a yes in the chat box. I hope today's session was very much useful to all of you. We covered concepts. We also covered a lot of problem, friends. All right. Normally, in my regular classes, I go a lot more in depth for the concept separately, problem separate. But since it was a 1 day session, that wasn't possible for me. So whatever is possible in this 1 day, I have covered my 100%. Now my only request to you is study and do the remaining questions and go write the exam with a peaceful mind. My prayers are with you. Let's study together. Let's win together, friends. And you have my number. Just send me a hi in WhatsApp, so I'll save off your number. So later on, if you face any doubts, I'll be clearing it. If I get doubts from unknown numbers, I normally don't respond because I get too many messages. So just send off a hi, so I'll remember that you are from this 1 day marathon, and I'll save your number. And once your number is saved, I'll be responding to all your doubts, friends. Thank you so much for your wonderful full day listening, friends. Have a lovely time. Study well. Do well. My prayers are always there with you. Okay. Take care. Thank you so much. Have a nice time.